Should we kick off with the shilling? Because, of course, that has been, as I said, front and center of policymakers and analysts' minds when it comes to what's, how the global risk aversion has really taken its toll on the Kenyan economy. Do you think the Central Bank of Kenya is now doing enough? They, of course, have increased interest rates, but many are saying this isn't enough.
No, it isn't enough. I mean, if you look at, say, the CBR rate that was raised just by 75 basis points, market expected even up to 400 basis point increase, just in order to stem the kind of losses that the shilling was experiencing. And what is happening to our country is a situation whereby being a net importer and having pressures on food and energy bills, and with the diminishing dollar inflows, then of course we expect the shilling to slide even further, unless of course then the central bank decides to take affirmative action in terms of increasing rates so as to stem the drop. But you see, on the one hand, they're also trying to push for a low interest rate environment.
Now, the Central Bank of Kenya has come out with a press statement saying that going forward they expect food imports, the need for food imports to decline, and also they foresee oil prices falling by the end of the year. This, of course, will help imported inflation and inflation expectations going forward. What are your thoughts on this latest announcement by the Central Bank?
I don't see much impact in terms of the foreign exchange position. In fact, I think it will slide, just as the rent cap had forecast, it will slide past 100 shillings. You see, the role of a central bank in any economy world over is not to send panic signals, or is basically to calm the markets. And the central bank basically wants to send out positive news despite things looking bad, the future looking bleak for the economy.
Yeah. Let's move our attention to the equity market. Of course, falling back every day this week, wiping out most of the gains that we saw last week. Mumia's sugar, though, an outperformer, up 2.3%, 6 shillings 85 cents, the level it closed at. We had domestic sugar production figures coming through for the month of July, falling back there. Is Mumia's a counter you'd be collecting at a level around 685?
Yes, definitely. At 685, Mumias is a buy. The fundamentals are still quite strong. Well, with the opening up of the COMESA safeguards, probably that's what hit Mumias, with most investors starting to offload, and of course the general market decline. But that notwithstanding, Mumias has gone a long way in terms of enhancing efficiency, in terms of its operations and production, and also diversifying its revenue streams.
East African Portland Cement also looking to invest in new limestone deposits. This surely should be good for the cement maker given its reliance on imported clinker.
Yes, we are seeing in the local scene most of the cement companies are looking towards managing their cost of inputs, and for East African Portland Cement, having a limestone capacity will be good for them, because then it will also reduce the reduction in the amount that they import. And of course, with the shilling behaving the way that it is, apart from the real increase in cost of clinker, then also they'll face the foreign exchange toll.
Atey River Mining has come under some selling pressure today. In fact, one of the top losers, down 6.25%, 150 shillings it closed at. Any reason for the sell-off here?
Yes, I think it's much more of profit taking. You know, Atey River Mining is considered a growth stock, and it really rallied upwards over a short period of time, and you'd expect that certain investors who got it at lower levels are just trying to pick a bit of some profit.